Is China's stock market the same as when we think about American stock markets, NASDAQ, or is it something completely different since it's a state-planned economy with SOEs?
So I think it is an entirely different stock market in most ways. Just as a couple of examples, just on valuation. Basically, the Chinese stock market, even now being up for the past month or whatever it is, the Chinese stock market is basically flat for the century. Okay, let me repeat that. It's basically flat for the century. Okay,
Like you mean 2000 to now?
Yes.
Okay.
Right, and compare that to like the U.S. stock market grows by maybe 8% a year, roughly.
Yes.
Right?
So no one's making money on the Chinese stock market?
That's basically correct, yes.
Well, I would say you can't. What you're saying is that long-term investors, the kind of like buy and hold and let your money grow, like that doesn't work. The day trading might still work. So some people are going to make money from that. Some people are going to lose.
Actually, you can't even day trade in China because there's basically a couple of rules about, for instance, how long you have to hold a stock. So in the United States, there's what we call high speed traders, which they will sometimes buy and sell a stock within a half second. In China, if you buy a stock, you typically have to hold it, for instance, as a simple example, until the next trading day. Okay, so it's very much not the same in that regard. Another example is that you cannot what we call short stocks. Okay, basically bet on stocks to go down. Okay, another example is the companies that you're talking about are on the major indexes are dominated by SOE companies, which have significantly lower what we call floats. Float is the amount of stock that can actually be traded. Okay, and basically the state holds a significant portion of most of those shares, and so there's very little actual trading exchange on a regular basis because there's very little float. So from front to back, the stock market is radically different than what we would think of as like the New York Stock Exchange.
So for China's quote unquote middle class, there were basically only two places they could invest their money. The stock market, which you're saying it was flat, they're not making any money there, or the real estate market, which is completely blown up.
Yes. So, I mean, officially real estate prices in China are down, I think about 5-10% officially. Unofficially, you definitely see stories of, properties being sold at, let's say, 60-75% less than what those properties had sold for a couple years previously.
Wow.
Well, does China even have a middle class anymore?
Yeah. Well, I mean, part of the problem is that there's the amount of like transactions on real estate is lower in China, right?
Yes.
Like it's just hard to actually find a buyer to sell your house.
Yes. So, like if you look at there are some cities where the turnover, meaning if I bought this property today and we had to go through every other property in the city before we circle back to my property, how long would it take? There's a whole bunch of cities in China that have 150-year turnover rates. Okay, meaning you would if you bought your property and then every other property in town had to get sold before it came back to you, you'd have to wait 150 years.
That's like a long time, though.
Wow, I can see why there's so much nihilism in China right now. That's hopeless.
Now, what they need is cryogenic freezing. Okay,
made in China cryogenic freezing. Yeah, that's the solution.
By the time they're ready to thaw you out in a century, you won't have to worry because the cryogenics didn't work in the first place.
Right. Well, I think this is really important because a lot of foreigners looking at China will see things like, oh, they have a stock market. It must be the same thing as our stock market. and not realize that this is an entirely just different system that's not going to work out for them.
Yes, there's a lot of things. I remember one of the first books I read on China after I had moved there was Capitalism with Chinese Characteristics by the MIT professor Washeng Wang. And the point that stuck with me, from the book is, in China there are many things that look very recognizable, but the details of how it actually works are entirely different. And so a lot of people get seduced into thinking, oh, this is a recognizable format, institution, whatever. But what is actually happening is entirely different than the framework, the intellectual framework we're coming from and how we understand that institution to work.
I guess for like a political example of that is when China says their whole process democracy, and someone thinks, oh, democracy. It's not democracy.
Yes, exactly. They try to use these words. They try to do things like the stock market, and the great example is that Chinese companies are not actually allowed to list outside of China. So you say, well, how can they list in the United States? Well, what they do is they basically set up a shell corporation probably in the BVI, the Caymans, someplace like that, that doesn't actually have a legal obligation linked to the Chinese company, but then they take that company that's been incorporated in the BVI or the Caymans and take it public in New York, because it has basically like a handshake, pinky swear agreement between the BVI and the Chinese company.
So
what you're saying is we should invest in those companies.
I would like to visit the British Virgin Islands and actually see what's going on. Go to some of these buildings where there's 50 mega corporations.
I would love to join you. You can go do the investigation. I'm going to sit on the beach.
Okay.
I'll tell you, if you guys ever do get into investigative journalism, there is a building in the BVI. Where basically, I don't know who this company is. Nobody can find out anything on them. But basically, if you are anyone in China, you have an anonymous corporation in the BVI at this office building. Okay? And there are so many dead ends that end in this one office building that if you want to go visit them and probably get roughed up by men in dark suits, I'll give you the address.
I'll do that while you're on the beach.
Okay, that sounds good. So, given everything that's happening in China now with their sort of duct tape stimulus that's not really a stimulus, what are foreign investors thinking about China right now?
So I think let's separate the types of investors that we're talking about. If you're talking about investors, for instance, that are, say, stock market investors, financial asset investors, I think they are really hoping that there is a stimulus and that China loosens the purse strings so that SOEs and retail investors can invest in the stock market and everybody can make money. Okay. I think what I will term the on the ground making stuff investor has a very different approach, a very different viewpoint. And what I mean by that is, as a simple example, that a couple of years ago, in a number of commodities, China was responsible for, in some cases, upwards of 90% of global marginal demand. Okay. And what I mean by that is, let's assume that every year the world consumed 100 million barrels of oil. Okay. And next year the world consumed 110 million barrels of oil. China would be responsible for 9 million barrels of that 10 million, going from 100 million to 10 million. So China would be responsible for 90% of any change. Okay. Well, now those commodity producers and those companies that were in China, they are, I think, distinctly more pragmatic about the potential state of the Chinese economy, the potential state for stimulus to impact things like commodities, the state of the Chinese consumer. And so I think a lot of evidence points to the idea that those types of investors are going to take a much, much more wait and see approach before they, for instance, open up a new China office or go back into China after leaving China. I don't think commodity producers, for instance, are opening up new fields in the hope that China will demand will continue to explode. So I think if we separate the type of investors, I think we can get a much better view of what I think they're probably doing.